In Canada, the employment statistics will be released at 8:30 with the employment change expected at minus 5,000. That comes after a bigger than expected 66.6 thousand. Last month, the unemployment rate is expected to tick up to 7.0% from 6.9%. What are the technicals in the dollar Canada telling traders ahead of that report? I'll go through that in this video, so let's get started. When you come into a key economic release, oftentimes the market sits at an area level that is significant from a technical perspective. And looking at the hourly chart here, this area right through here, between the 1.3923 and 1.39367 is home to a number of different technical levels going back in time. Looking at the floor right through here, broke below the floor, reaching down lower, but then quickly rebounded and reestablished support here before moving to the upside. That's typically what happens, or tends to happen a lot of times. It wasn't until earlier or end of last week the price came back down toward that level. It also happened to correspond with the 50% retracement. We tested that 50% and the high of the swing area again in trading on Wednesday. Trading yesterday, we fell below that 50% retracement and went down to the low of the swing area, found support, and then rotated back to the upside. And here we are trading in between this level right through here in the yellow area, right before the key economic release. Now, then you have, does it come out either more bullish or bearish, stronger or weaker? And on a weaker data, we expect to see the dollar Canada move to the upside of the Canadian dollar to weaken. And the next key target would be this 100-hour moving average. That's the low at the low of this swing area here. And if you just blow your eyes, you can see resistance here and support here, and then support here. Got a little wonky, but then use that level as resistance right through here. So you can see the importance of this area between 139.68 and 139.75. If the price were to move above that area, that would be more bullish, and we could see a rotation back toward the 200-hour moving average to see what happens there. Conversely, on the downside, if we move lower, we have some key daily moving averages down here, starting with the 100-day moving average of 1.3901, followed by the 200-day moving average and the 61.8% retracement at 1.38888. So both of those levels would need to be broken to increase the bearish bias. If it gets below those levels, look for more selling pressure. So staying at a neutral area right now, or that's where we're at right now, with a key resistance above, key support below. That's what happens, and we'll see how it all plays out after the Canadian employment report. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.